What is going on, everybody, and welcome to Bootcamp day number 24. Today we're going to be going over journaling and why journaling is so important for your success as a trader. But real quick, as always, before hopping into this bootcamp video, what I need you guys to do is do your daily check-in, comment down below letting me know you're still rocking with me until the very end. We have about 1 week left of this bootcamp, which is crazy. So hopefully you guys are still rocking with me. And while you're at it, also make sure to smash that like button as well as clicking that subscribe and that bell icon. It would mean the absolute world to me. But without further ado, let's hop into the video. Alrighty, so journaling. I do want to point out that there's no right way to go about your journaling. I get asked all the time, like, how do I properly journal? And again, there's no right or wrong way to go about it. So some things that I like to make note of when taking a trade, and we can just come up with some trades. Let's, I don't know, let's look at, I guess, Tesla today. I don't know what Tesla did. So let's just say with Tesla today, you ended up trying a bounce down here at 232.30, or actually let's head on over to the QQQ trade that I ended up taking today. So I actually ended up taking a nice QQQ bounce down here towards this 369 live inside of the Discord. Now, the whole reason why I like this level is because if we go ahead and we take this pivot low to pivot high on the Fibonacci retracements, you can see that we had this 50% retracement at 369.02. So when I go back and journal later on today and I go and review this trade, I'm going to start writing down why did I take this trade to begin with. We had a 50% retracement, a level of interest, and then as we break it down to smaller time frames, 1 minute, 2 minute time frame, we're going to notice that price had a pretty strong reaction off of that level. So as a result, we were able to catch a nice little scalp to the upside. It wasn't anything crazy, about like $1 pop to the upside. Again, nothing too insane, but I'm going to talk about what I could have done to then increase the profits by flipping the other direction. So we'll come back to that here in a second. So the very first thing, what was the trade I took? QQQ calls. Why did I take it? Fibonacci bounce, plus we had a bullish reaction off the level. Now from there, I'm also going to discuss my trims. I will say my first trim on this trade honestly was not the best. The reason why I ended up trimming was because SPY was actually moving, but QQQ wasn't. So that was pretty much out of my control. So as we can see, SPY actually rallied pretty hard to the upside. And as we see, SPY was actually coming up towards that 61.8% retracement, which could have been a possible reject area, which is why I was willing to trim QQQ a little early on this trade, because I didn't know if QQQ was going to start pulling back because SPY was actually moving, QQQ wasn't, and SPY was coming up to a reject level. Now, also at the same time, I was aiming for that 370 area, 370 just psychological resistance. And also at that point, we did have a nice little fair value gap inside of that 370. So I thought that would be a good first trim. And then as SPY was coming up towards that high a day at this 445, again, psychological resistance plus previous high a day, double confluence at that area that it could lead to a reject. That is why I ended up trimming again. So as far as the first trim, the risk reward wasn't the best, I would say. But again, it was just that kind of scenario where QQQ really wasn't moving when SPY was, and I didn't want to get stuck bag holding. Now, how I could have increased profits was if we go back to that QQQ, and this is exactly what I'm going to do when I go back and journal today. What I could have done, and I didn't see this at the time, was as QQQ was moving up on this 5 minute time frame against SPY, had this massive rally, came back up, hit that high a day. Well, while QQQ was moving to the upside, what do we see on the 5 minute time frame? We have volume here, not heavier than these previous 5 minute candles right here. We have lighter volume right here, and then on that third candle, we get a doji with very light volume, which actually went right into the 8 EMA, which could have led to a short position. So what I should have done, because I ended up selling the rest of my QQQ calls right above break even, what I should have done was sold those and then flipped short with a stop loss right above this 21 EMA. So again, when I go back and journal, what I'm going to do is I am going to talk about how I could have flipped short because the risk to reward to the downside, because then at that point, the risk to reward to the downside made more sense than the upside. So yes, we were able to catch a nice little scalp off the 50% retracement. But then if we look at this, we have 3 decreasing candles in a row. We have the 8 EMA, we have a fair value gap, plus price failed to close above 370. So I could have flipped short with a stop around, I'd say 370.5, 370.6, and I could have caught this entire move to the downside. Unfortunately, I did not. And that is what we discuss in our journals, how we can improve our trading going forward. So not only am I discussing the trades that I actually took, but I'm also discussing trades that I missed. And also at the same time, what I am doing is I am screenshotting all these trades that I take, losing trades, and even missed trades. Put them all into a Word document. Trust me, it is going to help you out a lot. That way in the future, you have something to come back to and reference to. And if you haven't already, make sure to check out my book, The New Age of Technical Analysis, on Amazon. My second book is going to be dropping in a week and a half. So I'm very excited for you guys to read that one. I am going to say you need book number 1 to fully understand book number 2. So make sure you guys go pick up a copy, and the pre-orders for book number 2 are going to be up this Sunday or Monday evening. Again, I'm super excited for you guys to read that second book. Yeah, make sure you guys check out book number 1. The link will be down in the description. Now, also, you want to journal through your emotions. If you're somebody who hesitates when it comes to your trading, let's just pull up, I don't know, let's go to, I guess AMD. Let's see if AMD even gave a setup today. Not really any setup today, actually. I don't know. Let's just go SPX, right? So let's just say you're looking at SPX, and honestly, I don't see really any good entries on here. But if we just go to the 15-minute time frame, say you're looking at price, it's coming down to your area of interest, let's just say 4,400, and you end up hesitating to get in your position, or you start thinking that the trade's going to go against you. So as a result, you don't end up taking the trade. Whatever the emotion may be, even if it's greed, doesn't matter. You want to journal about it, because trust me, that is going to help you a lot. If you find yourself second guessing every single time a trade gives you a setup, you need to go back and you need to journal. What are you thinking before entering that trade? So again, say, I don't know, just say price pulled back down to this fair value gap right here on SPX at around like 44.02. It gives a bullish reaction and you don't take the trade because you're thinking that this trade is going to go against you, and as a result, you don't take the trade. That thought of you losing money is what is causing you to hesitate. And as a result, you are missing out on profits in the market. There's no way to know if this is going to be a winning trade or a losing trade unless you take the trade. Now, obviously, we want to be using proper risk management. So if you did not see my videos on stop losses as well as position sizing, I highly suggest you guys go watch that. Those links will be down in the description. So when you're journaling, not only are you talking about the trades you took, you also want to talk about missed trades. Maybe it's not something that you saw at the time. Maybe you hesitated. Maybe you second guessed yourself. You want to talk about emotions. Did you take a dumb trade? So say you tried to bounce SPX at, or let's just say you tried to buy the breakout of SPX right here, and it went against you. There really was no confirmation to try to go long above these high points right here, because price already made a massive move from 44.40 all the way up to the breakout of 44.55. Now, could it have continued to push to the upside? Of course it could have, but that is just such a large move to the upside to the point that the risk to reward really did not make too much sense. So if you take a dumb trade, why did you take the trade? Did you force the trade? Did you have FOMO because your original entry plan was down here and you just saw price continue to push to the upside, continue to push to the upside, and you're like, you know what? I can't take it anymore. I gotta enter the position. And as you continue to write in your journal and review your journal entries, that's also really important as well. I like to review some of my journal entries before the market even opens every single day. You're gonna start noticing recurring patterns inside of your trading. So again, if you're somebody who hesitates to start taking trades because you have that thought of losing money, you're going to start seeing that inside of your journal. So if you go back and you're like, wow, the last 4 days, I missed out on a beautiful, profitable trade just because I thought that I was going to lose money, you're going to identify that that is what's wrong with your trading. And then from there, you can work on removing that thought entirely. So pretty much what journaling is going to do is it's going to help you identify your strengths, but also identify your weaknesses. And then from there, obviously, you want to work more on your strengths, and you want to start working on eliminating your weakness. But yeah, again, there's no wrong or right way to journal your trades. Write down what is most important to you and make sure that you're doing it every single day. Don't just journal if you're on a losing spree or you're losing money in the market. You need to be doing it on your good days and your bad days, because when you go back and you read through your journal on your good days, you're like, wow, I did this, this, and this correctly. And then you go back on your bad days and you're like, wow, I did this, 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 and this wrong. So it's going to help you identify patterns in your trading. And trust me, if you do this every single day, it is going to significantly help you in your trading. So to sum everything up from this video, screenshot all of your trades, winning trades, losing trades, missed trades, even scenarios, so specific setups that you see in the market, why you ended up entering a trade. Was it a winning trade? Was it a losing trade? Why do you think it was a winner? Why do you think it was a loser? That was something I forgot to bring up about losing trades. When you do have losing trades, go back and really try to break down the chart and understand, why was this a losing trade? Maybe the volume wasn't in your favor when you thought that price was going to bounce, or whatever the case may be. Try to figure out why the trade was a loser, because again, that is going to help you identify scenarios in the future to help you avoid that position altogether. And remember to talk about your emotions, review your journal, and make sure you're doing it every single day. But that is going to wrap up this video on journaling. If you guys have any questions whatsoever, feel free to comment down below, let me know, and I will be answering them. But as always, if you guys did find value in this video, make sure to smash that like button as well as clicking that subscribe and that bell icon. It would mean the absolute world to me. Everybody have an amazing rest of your day, and I'll see you guys in the next video.